Hello everyone, this is David from Abmtax. Today we're going to be talking about general tax deductions. As you know, we try to create this academy to help our clients, the general public, to have simple, easy answers about some questions they might have from taxes. We, in our firm, we have done thousands and thousands of tax returns, and by now we have a comfort level about what are like generic or common questions people will have about taxes. So in this series, we try to tackle simple tax deductions or stuff that you get to claim in your taxes and how they work. And we're going to try our best to simplify them to your consumption. So generally speaking, as you know, when you actually filing a tax return, you're actually filing a story telling the government, I made this, but I have this kind of tax deductions, and then this is how many tax credit that I would like to claim, and you arrive at either owing balance or a refund. And you file, and CRA usually process the tax return based on the information we provided, and then afterwards, CRA later in the summer, if they have any further questions on the tax return that have been submitted, then they will send those questions to you or to your tax preparer, depending on the setup. Now, the general categories of things that you will file in a tax return are usually income, tax deduction, and then tax itself, and then a tax credit. Those are the four items. They will have different names, different variations, but they tend to be along those four major categories. At least that's the way I define it to my clients, to keep it simple. So when it comes to income, we have employment income, investment income, which includes rental and business income. When it comes to the deductions, there's a wide array of deductions. It starts from RRSPs, pension deductions, membership, and so on and so forth, even interest on investments. Those are considered tax deductions. And then after that, you obviously have your taxes, which is based on your tax bracket, and usually it's a combination of two, a federal amount and a federal amount. And we will put a link below that you'll be able to click and download the different tax bracket for all the Canadian provinces. Now, the first item is what we call a tax credit. Now, it's basically what it does is simply, it is an amount of money that can be applied against the tax owing. And that would be things like your medical expenses, donations, tuition, and so many other tax credit. So to give you a big highlight or a big summary of what it looks like, imagine if somebody makes a $50,000 salary on their employment, they get a T4, and they have to declare that. That $50,000, usually most of people might have some deduction that could be deducted. Now, a good example of that would be an RRSP. So let's assume the same person buys an RSP of $5,000. So gross income or general income of $50,000, a tax deduction of $5,000, you actually arrive at a net taxable income or income that you pay tax on of $45,000, and then after that the tax part start. Usually it's a flat rate based on your bracket that get applied, and then after that you get to claim your tax your tax credits against that tax bill. Now it sounds like I'm like being a semantic of tax. So we try to keep it simple. Imagine this person, he makes $45,000, and let's assume his tax rate is 10%. He actually ended up paying a tax of $4,500. However, he's allowed to claim, let's say, $10,000 in donations. That will yield, let's say, because his tax rate was 10%, so he would get a $1,000 tax credit. So it's $4,500 minus $1,000. You arrive at a net tax bill of $3,500. Now, if in his job he paid $3,500 in taxes, that means he will owe nothing. But if he actually did not pay the tax, he will owe that tax at the end of the year. We will. I hope this is a simple example, try to explain the mystery of taxes, and we will try to give you more information on the coming videos, and thank you for watching.